Now, COVID has driven digital transformation in financial services and beyond. And now that we are already in December 2020, it's only right that we start looking ahead to 2021 and also put into account the long term societal and cultural transformation as well as its impact on conducting business. And this brings us to our next discussion that is titled Asia Leaders Recovery. Now, our moderator for this particular session is Smita Aggarwal, Global Investors Advisors, Flourish Ventures. And along with her, we also have our panelists, Elmer and Malolos, President and Chief Executive Officer, Data Analytics Venture Inc., Brett Jones, Chief Executive Officer, Wave Money, Niki Luhur, Founder and Chairman of VIDA and Co-founder and Chairman of Indonesia FinTech Association, and Raymond, Chief Executive Officer, Canadia Bank PLC. Let's welcome all of them.
Hello, good morning, good afternoon to our viewers from across the world. I'm Smita Aggarwal from Flourish Ventures, and it's a pleasure to be here at the world's largest FinTech festival. The Asia Pacific region, as we all know, has been hit hard by the pandemic, and Asia is not alone in suffering a contraction. The world is in this crisis together, and we will only emerge from it all at once. This is as true of the health crisis as it is of the economic crisis. But Asia is at a different stage from the rest of the world. The region went into this crisis first, and it has actually a different set of challenges that it has grappled with. It has applied the learnings from the past pandemics and epidemics it has faced and hopefully emerge stronger from this crisis. Asia is also unique in terms of its significant informal economy coupled with rapid digitization. While the workforce has been hit hard across the board with loss of jobs and drop in income, the shift towards the digital economy may accelerate inclusion for many. I have with me here as my co-panelists leaders from different countries in Southeast Asia. Welcome to this session. And let me begin by actually asking each of you to share, amidst all the gloom, fear, and anxiety that COVID has caused, what do you see as the silver lining of this pandemic? Can you give an example from your country that stands out as a positive trend caused by the pandemic? And let me start with Brad Jones, CEO of Wave Money.
Thanks, Smita, and a pleasure to be here, and also a pleasure to be on the panel with old friends as well. Look, it's been very interesting in Myanmar. Wave Money is a FinTech company, digital e-wallet and money transfer business that's been going for about 4 years now in Myanmar. We are the leading FinTech in the country, and we're serving really millions of customers per month across a network of about 65,000 agents that pretty much has universal coverage across the country. One of the things I would say during the economic crisis and the health crisis, and we certainly have a health crisis in Myanmar now, the central bank and government made sure that FinTech and mobile money was seen as an essential service. And this was really seen as critical by the government because there had to be a way to get money moving around the country in the absence of transport networks breaking down, such as bus lines being closed down, townships being closed off, and also a reticence for consumers to actually want to go into banks and really be in areas where there might be a concentration of people. So there's probably been two silver linings that we've actually seen with our business during the COVID period. The first one has been that as we've seen a large-scale change in the segmentation of money transfer in the country, and, for example, garment factory workers have pretty much disappeared and gone back to the villages since the crisis has begun. We've also seen university students going home and moving on to remote learning. So those two very big segments for money transfer have actually disappeared for us. But what we've seen is we've seen other segments moving into money transfer, given the ease of moving money around the country through Wave Money. And that includes small business people, and it includes people who really didn't want to go into banks and concentrate in those locations. The second silver lining we've seen, and I know this is similar across many countries, in emerging markets in Asia, but has been the rapid digitization of e-wallets in the country. So COVID-19 would, in my view, will be the greatest accelerator of e-wallet adoption that we've seen in ASEAN. And I know in a lot of markets, e-wallet adoption is also already very advanced. In Myanmar, it was less so. We've seen double-digit growth across our primary use cases and our monthly active users in the country, and we only see that increasing, month by month. So the great hope we have is that at the end of COVID, those customers actually stay using digital products, and the trial that they've actually had in terms of actually paying for e-commerce through e-wallets and so on is sufficient enough for them to want to stay in that market. So I would say in general, for our business, it has been actually an accelerator of our business in the last 9 months, and we're certainly seeing that continue.
Thank you, Brad. So great acceleration of mobile money and e-wallets, and potentially huge savings of marketing budgets for some of these companies like yours. Let's move on to Niki. What do you see your perspective from Indonesia?
So I would completely echo what Brad has said. It's all those trends are happening as well in Indonesia, and this year has been really a year of transformation. I think, again, two fronts, like Brad mentioned. Maybe first, just some quick statistics on numbers. There were 314 million e-money users at the beginning of the year, which was already a lot. But in October, that number has gone to 411 million users. So in less than a year, there's 100 million more e-money users in the Indonesian ecosystem, which now accounts for, finally, a statistic that's more than the number of mobile phone subscribers in Indonesia. I think in terms of peer-to-peer lending, which has probably been the next sort of emerging piece of FinTech, emerging vertical, it's been in its infancy. Peer-to-peer lending was really only born in 2016. At the beginning of the year, about $6 billion have been channeled, and since then, in less than 1 year, it's up to 9.4 billion. So this is something that we're seeing remarkable pace and adoption. I think a lot of that as well is what actually we don't even see. What is really the big silver lining is how the government has adapted, both from welfare payments, GDP payments, as Brad mentioned, is happening in Indonesia as well. But fundamental problems that have existed since 2000, for more than 10 years, frankly, around face-to-face KYC, around wet signatures. There's been a big change in that mindset. And I think moving towards eKYC solutions, leveraging facial recognition, as well as digital signatures, is finally being completely, completely welcomed. And what has been starting as a temporary measure for select use cases, we do anticipate to become permanent pieces of regulations and legislations that's going to open up financial inclusion and a lot more access. So this is something that we're very excited about. I think the bigger silver lining is actually yet to come. It's only happening now with the change in the progressive regulatory framework. Concepts like open banking from central bank are also happening as we speak. So this is where we're seeing a really exciting dynamic going on from the regulators, and we're very encouraged.
Thank you, Niki. And we will come back to you to delve more on what the regulatory innovations are expected to be. Let's move on to Raymond. One of the big things is how are banks responding to this crisis? So Raymond, love to hear your perspective from Cambodia.
Hi, Smita. Thank you. Good afternoon, everyone. So I think from Cambodia itself, there has certainly been a lot more acceleration in digital initiatives with this current pandemic. And I think similarly, like in other parts of Asia and even other parts of the world, we're seeing a lot more push, a lot more drive in terms of driving contactless transactions. And even in Canadia Bank, we actually have an initiative that we're working on now where we are trying to actually reduce contact as much as we can, but still make sure that there is actually engagement with our customers. So I think this year's Singapore FinTech's team is actually very apt, right? Talking around people and talent. So while we are actually pushing our digital initiatives out there, where we are rolling out more machines, more contactless payment points, we cannot actually neglect the human touch, the human engagement that customers will still actually call for in their banking transaction.
Thank you, Raymond. And moving to Jojo. And Jojo, I know you work with investments in many industries. You also work closely with data analytics. What do you see as the silver lining and your view from Philippines?
Thank you. Good afternoon to everybody, and it's a privilege to be invited here. I think there's a lot of silver lining, and basically on top of what Brad, Niki, and Raymond mentioned, I'm actually working for a huge conglomerate in the Philippines. It's a Gokongwei group of companies that basically represents almost all of the industries that basically capture the transactions across the masses, the basic base of the pyramid. So what we're seeing as a principal silver lining really is the fact that because of COVID, and in addition to that, the Philippines is also a country which is often visited by typhoons, right? During this COVID period, we were devastated by 3 huge typhoons that basically added to the pain that we were already going through COVID. Is that people have become very, very health conscious. I think the behavior of people down to the base of the pyramid to be health conscious has allowed them to basically support what Brad and Niki had mentioned earlier, where people, because of being health conscious, are now willing adopters to digitization, right? So before, if you still have an option not to use your digital payment, you will try to do that. But now, because people really don't want to get out of their homes, e-commerce has become a reality to them. Meaning, they not only do they not go to the supermarkets to buy their goods, but they also pay digitally because they want to get rid of the cash that's supposed to be perceived as potential source of the virus, right? So also on top of that is the fact that the government, like Niki mentioned earlier, had actually accelerated the path to digitization by now allowing even the payment of government services online, right? So we've seen massive increase in the rate by which taxes are paid, on a monthly basis, by which social security payments are made, and this is cuts across the entire base of the Filipino consumer. And also on the other side, like FMCGs, right? Not only do they see this as an opportunity to streamline their services, a lot of the advertising are now going online, meaning they would rather go advertising and see actual conversion of consumers really buying because of this advertisement. So data has become very, very important. Data analytics has become very, very important, wherein some of the companies have relegated themselves to offering an alternative to becoming an advertising channel and actually facilitating actual conversion, getting people to really buy offline and buy online. So these are very important things. But again, the silver lining is all around getting the ordinary Filipino consumer who doesn't have a bank account to actually use the phone and actually use GCash, actually use PayMaya, or even some of the bank's digital facilities. So even rural banks have started to come up with their own rural digital payment systems. And this is, I think, going to be a very, very good takeoff point for us to see a different 2021, a new normal that's going to be permanent. So this is basically going to help the country, maybe shorten the path to recovery. Maybe instead of an L shape, it can be a U shape type of recovery, but definitely not a V type of V shape type of recovery.
Thank you, Jojo. So I what I hear you all say is there's a definite shift in consumer behavior, acceleration of digital adoption, all forms of electronic and digital services are seeing a huge uptake. And the other important point that I'm picking up is a shift in the stance and the attitude and the pace of the regulator. And let me start with you, Raymond. What is the shift you have experienced from the regulator in this post-pandemic scenario?
Sure. In Cambodia, the regulators have actually been very swift, very proactive, as well as very supportive on the entire community, in particular the business community. So I think when the pandemic had actually started early part of this year, there were a number of initiatives that were actually provided by the regulators in terms of providing businesses certain loan moratorium, which has actually now been extended up to middle of next year, right? Where they actually allow businesses that have actually been impacted by COVID to actually defer their principal loan installments for up to middle of next year. And there are also a number of funds and as well as allocation that the government has actually put aside to actually assist businesses which has actually been impacted, as well as supporting them during this very challenging time. For example, the incorporation of an SME bank in Cambodia, where SME bank would actually be assisting and supporting the local SMEs in Cambodia. And they started out by actually initiating a $50 million scheme where they actually co-finance it with financial institutions in Cambodia. And that has actually been fully subscribed as we speak now. And they are also potentially looking at allocating another 300 more million to the SME sector. And even as of last week, we actually had the incorporation of a corporate guarantee scheme under Corporate Guarantee Corporation of Cambodia, which the government has actually allocated 200 million. And this is also going to actually support the respected SMEs as well as businesses here in Cambodia. So you can see that the regulators have certainly taken a lot more proactive stance, a lot more proactive view to actually support them and the businesses financially, along with actually supporting the banking industry.
Thank you, Raymond. And moving to you, Brad, the fiscal support and policy support coming in from the regulator and policymakers at this point has been super critical. What has been your experience on that front?
We're seeing nothing less, Smita, than the greatest transfer of cash from the Myanmar government to the people of the country in the history of the country. There is hundreds of millions of dollars being distributed now down into the communities to actually help people get over the economic crisis. And it is extraordinary. We have gone from having one or two very small projects with government to now working actively on 8 different projects with government. We have another 17 projects in the pipeline with government. And we are very much trying to position ourselves as being a critical partner to actually help get this money out to the communities. Very early in the COVID crisis, we actually made the announcement that any payments we made on behalf of government or NGOs would be made free of charge. And in fact, we even pay the commission for the cash out. So it actually comes at a cost to the company. We're happy to wear that cost because we see ourselves in a time of crisis really as a national utility for the government to actually use to help distribute money around the country. It's been very interesting to see what's been effective and what hasn't been effective. So we haven't been successful in convincing all government departments to move away from cash. And I'll give 2 examples of where it's been working and where perhaps it's not working. So we recently did 220,000 payments for pregnant women across about 10 different townships in Myanmar. We used our existing distribution network. We didn't have any interventions for liquidity. And we were able to actually manage those 220,000 payments over the course of a few days, and really reach. It was about a $75 payment, and really reach those women who really needed that money. There's another government department that is doing it by cash. The World Bank has estimated, and this is from the press, so this is not hearsay, and I won't name the government department, but the World Bank's estimated that only 27% of the money has reached the recipients. And there has now been 100,000 complaints made to the responsible minister to move payments out of cash. So we're talking to that particular ministry to see whether we can assist in terms of actually making those payments through mobile money. But there is nothing more polarizing than those two examples. 220,000 payments made to pregnant women that just went seamlessly, completely transparently. There's no leakage of any money. And then there's 100,000 complaints back to a minister around a $40 payment that was supposed to be made to the poorest of the poor. So from our perspective, we are working very hard to be seen by government as a really necessary utility. And fortunately, the successes we're having, I think, are starting to show the government that it really is time to push government-to-person payments in a much bigger way.
I really hope that there are the right lessons that the government is taking from those two contrasting examples that you have experienced. Moving to Niki, you already alluded to the big shifts that you're seeing in the regulatory stance. So share with us a few specific examples, and also, what do you see happening because of this opening up of the regulations and the policy making? What is the next forward-looking business models you see emerging because of that?
So definitely in the past couple of, since the beginning of the year, there have been emerging regulations around identity verification, eKYC, digital signatures for some time. But it's one thing having the laws in place, it's another actually implementing and getting it to scale. So I think the number of use cases that allow for this digital identity infrastructure has really skyrocketed this year, and it's been a big tailwind for VIDA since we're in the digital identity space. But I think at the same time, it's more about this shift in mindset, right? If you're working from home all the time, you're going to have some basic tools to help coordinate logistically, right? And this is where things have definitely changed. So I think that's today, and it's already scaling, and with more and more G2P programs, not only for individuals, but for SMEs, it is changing the entire landscape, because now you're digitizing the entire ecosystem at the bottom of the pyramid as well. And there's access, there's channels to communicate. I think one of the more interesting forward-looking pieces of regulations is coming from Central Bank, from Bank Indonesia, specifically on their vision and their blueprint for the payment systems over the next 5 years. And we're talking about the most progressive regulations of open banking and being able to try and create this environment that fully respects personal data protection, fully respects privacy, but at the same time gives more choice to consumers to be free to move between a financial service provider, whether it's a financial institution or a FinTech, and be able to have that freedom of choice and being able to ensure that there's also a minimum bar when it comes down to how you protect their data, and making sure that there's a clear level of accountability and making sure that there's fair and transparent use. So these types of concepts have been around, but for us to see them actually be put into action, to see OJK, the Financial Services Authority as well, walk in lockstep and encourage financial services innovation, encourage digital financial services. There's more than 20 new FinTech business models that have emerged all the way through equity crowdfunding to financial planning to financial aggregation, innovative credit scoring. There's a series of new emerging FinTech models. And last but not least, to see that all concerted together with the Ministry of ICT, with the President of Indonesia, with the Coordinating Minister of Economic Affairs, with the Ministry of Finance. I think there hasn't ever been such a coordinated and concentrated focus to really drive the FinTech ecosystem, because it's really it's just necessary foundation for stimulating the digital economy as a whole. So being able to see this in the bigger perspective that fintechs can help enable and drive actually economic recovery. And it's already come to this point where imagine if we didn't have that infrastructure and this pandemic hit. Could you imagine the gap, the delta of what the economy would look like in that situation if it had hit 10 years ago, just 10 years ago, or even 5 years ago for that matter? That would be, it would be crippling. So by no means are things great, but I think it's all relative, and it hopefully will enable a much more not only rapid recovery, but acceleration for many years to come.
Smita,
So,
can I?
Sure,
Smita,
come in.
Can I just add something that what Niki said actually, and it was a conversation we had in our own organisation in the last week on exactly the same point. We were conceiving a world without wave money in Myanmar had we not actually been operating. And what actually happened in Myanmar is that, like a lot of countries, the transport networks shut down. The airports shut down, the bus stations shut down, and the ability for cars to go from one township to another part of the country completely shut down. Bank penetration is very low. And so what would have happened if we weren't actually operational is money would not have been able to move around the country. And over the period of the COVID crisis, we've moved around about 5 to 6 billion US. That's 5 to 6 billion US that has been moving from unbanked customers to their families in different parts of the country. And like Niki, I think had that business not been working in Myanmar during this crisis, the ability for money to move around the country, or the inability, could have caused untold hardship, far greater hardship than what we've seen already. So I think, at the end of this crisis, it's going to be very important to go back and look at the fintech businesses in these emerging markets and actually see the social and economic, benefits that they've actually had, because I think they probably far outweigh what most people are considering now.
Absolutely, Brad. And, moving to Jojo, we have seen most markets, the regulator and the policymakers can actually play a very meaningful role, not just in laying out the policies, but also creating the very essential infrastructure for use, having a digital identity, allowing for interoperable digital payments, having, KYC norms being, as an open API being available, use of data and seamless processes around that. What do you see in Philippines that is accelerating some of these trends?
One thing I can say is that I think our central bank right now has very, very high approval ratings, right? So because they're very basically maybe in the tail end of their execution of their digitization footprint. And recently, they came up with, they just released, similar to what Singapore's been doing. They have just released the guidelines by which a digital bank. They have created a new category in our banking system, which is to create a digital bank. And this is basically just a follow-up of what they have done in terms of making sure that there's interoperability across financial institutions, that there's been massive acceptable policies around transferring money from one, even if it's a rural bank, transferring money to a fintech company like GCash or Paymaya. But I think the underlying, again, I emphasize on the underlying silver lining is the fact that we have really seen acceptance from the consumer, from the ordinary Filipino consumer. During the early stages of COVID, much of the movement was really on the bank, right? So the interoperability across banks was principally seen as benefiting those who have bank accounts, but they have never seen that the movement is really coming from below. Those don't have bank accounts. But towards the latter part of the COVID, they have seen because you have connected e-commerce, you have connected settlement across SMEs and and supermarkets and other big companies to being digitized. So I think this is where the public and the private sector have actually supported each other. Niki was talking about the digital ID, the national identity, EKYC. This is actually the time that people realize that they can actually, they really just have to use their smartphone and do this process of EKYC. Again, the good thing here is that consumers are adopting. There's still a lot of work by which you can bring it down to the base of the pyramid, but the experience of not wanting, because the experience of not having to go out of their homes is universal. It's across everybody. It's not just those who are more conscious of their health. It's across. People, drivers, jeepney drivers are relegated to having to stay at home, not have jobs. It's not because it's a mandate of the government, because they also don't want to go out, right? So, and because of this, we're able to penetrate that mindset. And I think this is going to be the crux of what is going to support this type of infrastructure moving forward. Again, the government is, very, very high approval ratings on how they have been able to manage this, not only the COVID, but also the way of people are working and the way they're supporting the new normal.
So, taking a cue from what you're saying, we are saying that the customers are more adoptive, the governments are very supportive. Raymond, if I were to turn this question to you, the banks are obviously gearing up to serve the customers' need. The regulatory and the policy environment is very supportive. In all of this, do you still see a role of fintechs and early stage startups? Do you see that there is a role for them, or it's the incumbents who will continue to serve the customers?
The incumbents, Smita, would be the one, I would say, at the forefront, driving the businesses forward. But the roles of fintech will certainly still be meaningful and significant, because I think today there ought to actually have a lot more meaningful partnerships between financial institutions with fintechs. As we speak today, I think we have actually seen a number of new partnerships being formed up, and I'm actually speaking about on behalf of what's happening here in Cambodia, that we actually see a lot more new meaningful partnerships that are being sealed between banks as well as fintechs. So I think fintech will certainly play a very, very meaningful role moving forward. In fact, I think their role is actually a lot more significant in this current pandemic situation, because I think banks today, for example, you have incumbent banks who have actually been operating for many, many years, and they are relatively comfortable in terms of doing things in, I would say, the prior way, right? In a prior way, and there's something to actually look at how to do something different. I think the fintechs will certainly play a very important role.
Does Canadia Bank partner with fintechs? Do you have partnerships with fintechs, and in what areas?
Yes, we do. We have actually partnered a number of fintechs in both payments as well as also in terms of collection.
And is this something that you have accelerated in the post-COVID scenario, or are you continuing to do what you were already doing earlier?
The COVID situation will certainly accelerate this initiative, and we continue to explore in terms of how we can actually reach out to more customers. So as I mentioned earlier at the start of our session, I think the initiatives that we are trying to actually drive in the bank is actually more of reducing contact, but not actually forgetting engagement. So I think while we try to roll out machines, use more contactless points of collection and payment, we certainly cannot actually neglect the human touch, and we continue to actually invest on two fronts.
Right. Niki, sorry.
Can I just to talk about the incumbent versus the fintech? I think the line between incumbents and fintech have starting to diminish, right? So in the Philippines, for example, coming up with a new guidelines on digital bank will basically continue the wake up calls on the bigger banks, right? Because really the proponents of digital banking right now can be anywhere between a fintech, a small bank, a rural bank. But the thing is that the penetration of the base of the pyramid is becoming very, very clear to be the main objective of everybody. So in the Philippines, you will see a lot of companies, the incumbents who have digital plays, now having to really apply for a digital bank license and let them be at par with all of those new fintech companies. And this is all good for everybody, right? Like in Singapore, with Grab partnering with the Singtel and with Ant coming in, I think this basically level the playing field in terms of reaching the base of the pyramid. So I agree with Raymond. I think the partnership is very, very critical, but aggression by which to really bring these services to the base of the pyramid or to those unbanked is really very, very critical at this point.
You made a very important point, and I'd like to move to Niki. Do you see a change in stance in engagement with the incumbent banks and corporations, as well as are they more amenable to addressing the unbanked and the lower income customer segments, which have traditionally been neglected?
So I think there's definitely, there's more than 100 banks in Indonesia, so I don't think it's a one-size-fits-all sort of answer. But if you look at the majority, the one thing that's clear is digital transformation is no longer a buzzword. You have to do it. And it's a question of how you think you can transform yourself in the best way possible. So I think there has been a significant shift in mindset that we've got to partner because things are moving so fast, and otherwise you're going to miss the train. So I think that has never set in the same way as it has this year. So there's been a lot more. There are different strategies. There are different thresholds and comfort levels of control that are expected depending on the financial institution. But we are seeing a lot more activity, even from some of the biggest incumbents, at least on their venture capital arms. So at least there is an idea of whether it's a pure arm's length partnership or, at the end of the day, it's an indirect, through an investment. There's a lot more exploration going on. And I think it's clear that these are very different skills, right? They're very different skills. It comes from very different talent pools, and it can be complementary. I think the question is, depending on the organization, which way are you going, right? There are very big tech companies who might be going the other way around, right? Into moving into banking through some big partnerships. I think at the end of the day, what is interesting is we're seeing a lot more collaboration and new business models emerging. And when it comes to the new business models, at least it's less of a threat, because there isn't much of a market anyways. And in those specific situations, whether it's around, for example, capital markets in Indonesia, it's still highly underpenetrated. So when you're talking about those types of areas and collaborating in unserved or highly underserved segments, it tends to be much less confrontational. So I think that's where hopefully that mindset is shifting for everyone. But I think, whether you like it or not, it's clear you have to be digital, and the efficiencies of when you do get there, and not having to rely on all the physical infrastructure, because consumer behavior has changed, period. We're talking about 411 million e-money accounts on a population of 265 million people. This has changed, right? The way we live has changed. And to ignore that and say that this isn't going to be a part of our future, I think it's not a question of fintech or bank. It's a question of whether or not you're willing to change yourself.
Absolutely. And, I think the big message across multiple countries that we just discussed was that, the digitization, the movement of money digitally from government to person. And, by contrast, we have all heard of the struggle that US went through in the stimulus distribution, where they actually had to write checks and mail them. and obviously many people didn't, receive those checks. So traditionally, we have all drawn inspiration from the Western world and looked up for innovation to come from Europe, from US, from Silicon Valley. Do you see that shift where Asia by itself is becoming an innovation hub, where Asian countries are recognizing the issues and challenges that you face and are using technology as a lever which the world can draw inspiration from? Do you see that shift, or do you feel this is a one-off thing, but the big innovation hubs would continue to be in the US and Europe?
I'm happy to jump in here. I think that shift has already happened, actually. This happened a few years ago. I think if you go to any FinTech conference or payments conference in the world, the reference has been Asia. The reference, and now with Ant Financial, I mean, it's proof, right? It's no longer a theory, it's proof. So that shift has happened. And when you're talking about bottom of the pyramid, you look at India, what they've done with Aadhaar. I mean, it's not just a theory. It's not just, oh, this could work. It has, and it's already scaled beyond anything else in the world. So I think this is where, Asia, it's, I think especially Southeast Asia and South Asia with great, demographics and the demographic surplus that we're enjoying, and this really digital first and almost digital native mindset that's coming along with it. It's, this is where I do believe the biggest innovations are going to come from our region.
Yeah. And what do you think is driving this shift? Yeah, go ahead, Brad.
Yeah, Smita, I'd agree. I mean, I've been in mobile money now for about 13, 14 years, and Jojo will remember back then as well. But, we looked to Africa to a great deal, right? So I remember still going across to Kenya and South Africa in 2007, 2008, and taking inspiration out of what was happening with M-Pesa. But I actually think the reverse is happening now. I think what you're seeing in East Africa is you've got about 35% smartphone penetration, still very much USSD-based type ecosystems. What we're seeing, as Niki said, in Asia is very much app first. I mean, we're 85% smartphone penetration in Myanmar. The average data usage for a Myanmar consumer is the same as a consumer in Bangkok or Kuala Lumpur. So we're seeing huge data usage. We're seeing huge digital take-up. And frankly, when I use my WavePay mobile wallet, it's far more convenient for me to do my financial and digital transactions than it is if I'm back home in my home country in Australia and trying to actually live my life through multiple different internet banking channels or whatever. So, I think this whole super app, I mean, super app is a much misused term, but I do think it's an interesting term because it really is about actually bringing all the digital services that you may need into one app. And we're seeing this actually happen in every market in Southeast Asia. So I really do think we're seeing a reversal where our friends in East Africa are already starting to look at us in Southeast Asia and saying, what can we learn from Southeast Asia now? So it's been a great reversal from what happened 13, 14 years ago.
Yeah, I agree. And if I may chime into this, I think I've worked, in the Philippines. I've worked in Africa. I've worked in the US, and it's been reversed ever since. You don't see a wave money in the US. You don't see a wing money in the US, where you use small shops to be your branches, your human ATMs, right? So you don't see so much QR in the US.
Yeah.
Actually,
that's again very unique to Asia. The whole QR code, right? Low literacy levels, very easy to use.
You will not be able to find a prompt pay initiative in the US or a pay now initiative in Singapore in the US. And I think from an investment perspective, we have seen massive flowing in of money in Southeast Asia. Let's remove China because that's a different animal altogether. But even without China, you can see proliferation of of money coming in and investing in innovations in Southeast Asia. And why is that? Because this is where the problem is. This is where the issue of interoperability becomes very, very apparent, just like what's happening in Africa. This is where it's been very, very difficult. In the Philippines, penetration of credit cards is 3%, right? So maybe in Myanmar a lot less, and in Cambodia 0.5%, but again, the ability to come up with innovations that will really be coming from the Southeast Asia or the emerging markets for that matter. It's very critical now for the Western world, particularly where they put their money in terms of investing. But I think the more important aspect that we need to really identify in Southeast Asia is the capability to execute, or the capability to basically take this on and lead it ourselves, right? So I think half of all of the startups in the Philippines are run by foreigners, are run by Westerners, and they come to the Philippines. Maybe that's the same in Indonesia. They come to, and then basically take advantage of that because they have this capability of solving problems. They end up finding, forming a company to address all of these needs. And right now, everything is now on a sandbox, and people are really trying out new things. But yeah, I mean, it's been reversed for some time now.
So it's a great point you have, raised around talent and capability. So I also want to now broaden the discussion a little bit to, this is a great opportunity. The pandemic has turned out to be a blessing in some form, despite all of the pain that it has caused. And so how do we make the most of this blessing? What are the roadblocks or the challenges that would still need to be overcome in order to make something meaningful come out of all of this? Otherwise, this would be an opportunity that would get lost. Raymond, would you want to chime in first, and then I'll move on to the others?
I think, with everything going online now, there's also balancing it out with the increasing proliferation and sophistication of cyber attacks. And whether it's a blatant attack, the issues that beyond that, we're also talking about the personal data and personal data protection. I think these are the elements that we have to get right. We have to get the regulations right. We have to get the foundation right, and frankly, the industries have to self-govern in a certain respect and enforce amongst each other to ensure that this trust that has been built over this period stays, and we don't end up having rogue actors end up destroying the trust that's been built. And I think that's one of the most critical risks that I see is sometimes it's for lack of awareness. Security is never a fun topic to talk about, but I think these two aspects of data, data governance in general. I mean, the data needs to flow. Don't get me wrong, right? It's critical that it flows, and I think it could flow even faster if we really have the right frameworks in place and
have the right guardrails in place to allow it to move.
If we harmonize it, more importantly, across the region, across Southeast Asia, what that could mean for the region, right, beyond a single market. I think that is where the real potential can lie, but it's going to take a lot of hard work between now multiple jurisdictions aligning and harmonizing on some pretty sensitive topics.
Brad, you want to come in on the challenges and roadblocks? Yeah.
Yeah, look, I think the key thing for us, Smita, is not to take our new customers for granted. And one of the things we're doing at the moment is really digging deep into the reason why customers have adopted digital payments. I mean, it's very easy to say, well, it's COVID, so they've done it. But, we really want those customers to actually transition and stay as digital customers over time. So we're really not taking them for granted. We're digging deep. We're looking to understand their behaviours. We're looking to understand, really their propensity to continue to actually use digital products after the pandemic, and really trying to understand in greater detail the segments that have emerged. Because I think it's all very easy to actually just call them the digital natives, but that's a very nuanced term now. And I think, the digital natives actually are very, there's many different sort of trends of what actually constitutes a digital native now with COVID. So that's the key thing for us. We're not taking this customer group for granted, and we're looking deeply to make sure that we continue with them on the journey as COVID hopefully starts to disappear.
Right. We are just short of 2 minutes before our session ends, and I'd like to do a quick round of a rapid answer, literally in one sentence, if each of you could say that as you project into 2021, do you expect to emerge stronger than before the crisis? Yes or no, and why? Let's start with you, Raymond, if you're back up.
Yes, I am. Yeah, sorry about that earlier. We had some technical challenges earlier. Yeah. So I think we will certainly emerge, I would say, a lot more experienced and driven. I wouldn't use the word stronger because from a financial perspective, we really do not know what the future will hold. But I think what COVID has actually taught us is that we need to actually be a lot more resilient, a lot more driven to actually find better solutions. So I do believe we will emerge a lot more positive, a lot more encouraged, and I do hope financially stronger as well for 2021.
Thank you, Jojo.
Yeah, definitely we'll be resilient enough to do that. But I think this COVID is so deep. Plus 3 or 4 typhoons is so deep that I think we learn lessons from it, and then how we'll be able to be stronger, anticipating more of things like this. But I guess behind this is really the mindset of people now to adapt to the digitized new normal, and I think this is what will carry us through.
Niki?
10 times stronger.
Great. Brad, you have the last word.
Yeah, look, we'll come out of it stronger. I mean, financially stronger. We're in the process of closing the investment from Ant Group into Wave Money at the moment, which really is giving us a very strong capital investment, as well as the technical expertise that comes from that. And then the acceleration of COVID. We're definitely coming out of this stronger, but not without scars.
Thank you so much. I think that's so well spoken, each of you. And it's been an absolute delight to get this multi-country perspective from you who are actually operating locally in the trenches and have a ringside view. I hope the viewers have enjoyed. Apologies, we've not been able to take viewer questions, but thank you on behalf of all the viewers to the wonderful panelists.